Welcome to one of my videos about swing trading for trades of 2026. This is a series, so you can also watch the whole playlist about my previous trades, about the recommendations of any format of swing trades I have recommended. So far in this year, I've just recommended Airbnb, and this would be actually my second video about trades of 2026. I had made three videos actually in 2025 about trades of 2025, and two were winners, one was loser. So let's dive into this one. So today we are actually talking about gold and the current geopolitical situation. Today is Sunday, 22nd of March, and there has been around 22 regular days of data about geopolitical tensions in Middle East or West Asia. So ever since the war started, not a single day gold went up or silver went up. Platinum did not also. No metals did went up. So it's a very surprising situation why it has happened. And a lot of retail investors were thinking that it would go up, but it has not. And maybe some feel like it's a hoax. So it's not a hoax, I mean. And the way it's moving, people feel like it's maybe not a buy, but it's actually a great buy right now, right here, right now. That's why I'm making this video. So we're gonna look at GLD options, which is the biggest gold ETF in America, and you can trade it via a lot of brokers. If you don't want to go in options, you can go in CFDs or whatever gold derivative your broker provides. So we are looking at 3-month chart currently in gold, and gold has a history of 5,000 years of it's being called as a store of value. So I don't think so any country or government or a central bank comes out and its trading pattern or derivatives trading pattern can change it. Okay, 5,000 years of history, a lot of data, and a lot of trust from many ethnic groups considering as a store of value. They say that millions of languages and millions of cultures, but they all come at one store of value, which is gold. So almost all cultures consider gold as a store of value since history, and currently also a lot of central banks do trust it as a gold store of value. So gold is a store of value. Current big hedge fund recommendations of gold as a portfolio share is around 10 to 15%. So it was at 5%, but in 2025 and 26 it came up at 15%. That's a jump of 200% in allocation. One very renowned hedge fund, Bridgewater was actually the top performing hedge fund in 2025. So they bumped the allocation from 5 to 15, so 200% change in allocation. Modern hedge funds are looking at gold as a store of value. That's what I'm trying to say here. And let's come at risk to reward. Let's see what the charts are saying. This is the GLD chart. This is the same chart you would see in CFD or in gold futures, CME futures. Same chart, you would see that. Same this format of chart you would see there. So no change. If you want to see that, I will pop that up here for a moment. So this is the gold chart. This is the options chain, and currently the GLD EDF trades at 413, and we are looking at a 3-month chart. And Friday and Thursday was big losing days for gold. As you see, it was like a 5-7% of drop, and Friday it did also follow the drop of 3-ish%, and on Thursday it went into huge 6.6% drop, and on Wednesday there was a Fed meet, and even in that Fed it did went down. So overall a 10% drop in 3 days. So it's a buying opportunity because currently it sits at the year-to-date low, YTD low. It's like where it opened for the year of 2026. It was here somewhere where it actually opened, 405. Same price in XAUSD and same in gold futures. So it was 4300s maybe where it actually opened up for the year 2026. So it is coming at a major point of liquidity, which is 2nd of February. On that day, maybe gold, before that day, gold drop around 10%. So we may see a trend change after this point of liquidity is taken down. So currently, the position is, the trade we would make is long calls for December in GLD. Currently the bid's at 36 for 430 strike. I would buy this strike, 430 strike, and I would also maybe buy it at 35.5 because the ask is 39 right now. So maybe if it drops a percentage on Monday, we would get filled on 35, 36. Okay. So current 36 price is not bad. I would even buy market, but that's up to you. The trade is open right here, right now. That's only when I made the videos with a exact to-do plans for what's the move on this. So we would long 430 strike. You can even buy 410s, but that's up to you. If you have money to spend, you can even long 410s, which is currently in the money, and you would get it at 43, 42 on Monday. All right. That's a $4,200 investment in this call. So the stop loss would be 350. So technically the strike price at that time would be trading at $5 or $10 for these two strikes, of which I'm talking about 430 and 410s. So if you get near to the stop, you would lose around $3,200 or $2,000 in this strike, and in this you would lose around 2,800, something like that. Okay, I'm aiming at $5 to $6 value for this price if it happens. Okay, so the take profit on this trade would be around this price for 80s, which would be $70. So this would go around 100, 110, something like that. If it hits an all-time high, which is very likely it does, it would go like 140, 130, something like that. So risk to reward is around 3 to 3.5, and gold is a very sound asset. Risk is limited and reward is 3.5. So I think perfect to enter the market at this point. So a 1:3.5 trade here, and you can even exercise the call option, and you can make an extra income of 20 basis points around every 3 days in a week if you know how to short dated OTM calls. So how that is done is that when you buy this 410 or 430 call, you would go out and get a 20 delta short dated you would short the call for 20 delta in GLD. So if you don't know, GLD has 3 expirations a week, and you would get a 20 delta call. So as you see on 22nd of March today, 23rd of March, Monday expiration, and we would come at a delta under 20 delta call. Currently trades at 11 cents. So you would come out and short this one for that day and you would make money. That's the idea. You can even go 10 delta. 20 delta is what the experts recommend, below 20 delta. So they would come out and short this at the New York session open, because that's only the time you can trade GLD options. It's not a 24-hour market. It's just available to trade at the New York session. All right. This is the plan. This is the idea of 1:3.5 trade and plus some 20 basis of a weekly income. 0.20. Don't know what 20 basis is. So yeah, that's the 2 cents of this trade. Subscribe and like my videos.